Good morning. Market Day Report is on the air, and we're preparing to start the trading session. Before we start today's trading session, though, let's look at what happened in the overnight session. We'll start with the corn market. And by the way, flash sale reported overnight 120,000 metric tons. Unknown destinations. May contract overnight a little higher. December, though, down a penny 3/4, 442 3/4. That old crop, that's new crop that fell a penny 3/4, but the old crop for corn has been down 3 consecutive sessions. Also, new crop for soybeans has been down 3 consecutive sessions. Overnight, 10.15 down 9 3/4 cents. How about the wheat market? Well, let's start with July. Chicago, 1 tick higher, 525 3/4. For hard red, July down 3/4 of a penny, 530 1/4. And spring wheat has been lower 3 consecutive sessions. December unchanged at 624 3/4. Finally, to the cotton market, also down 3 consecutive sessions. I'm having a hard time saying that like 20 times in a row. 67.74 in the overnight session, down 53. Help me out. President, Midwest Market Solutions, is Brian Hoops. Brian, welcome back. Thoughts on overnight trade?
Yeah, Tony, we saw new contract lows once again in the wheat futures. They were under a lot of pressure all this week because of good improvement in ratings on Monday. And then we saw the rains that are coming again this week. So we're likely to see additional contract lows come next Monday in the wheat. And that is really dragging corn and soybeans down. Deliveries started overnight, and they weren't very heavy at all for corn and soybeans. I think it was 240 corn and 3 contracts of beans. So just very light deliveries, a little bit larger for some of the wheat contracts, a little bit burdensome there. But usually we get some sort of a bounce coming out of this delivery period. And you would think maybe this old crop corn would be the first one to rally because of the private export sale that you referenced this morning. There was another one earlier this week. So we've had a couple sales at these lower price levels. We are stimulating a little demand. We turn the calendar to May. We start to talk about the supply and demand report in the month of May. Maybe, again, tighter ending stocks once again. Maybe the USDA tightens those balance sheets a little bit further because of strong exports. So we'll see if we can do some sort of recovery after lower overnight trade, but it wasn't real strong technical action yesterday. Not seeing much of any type of recovery here in the overnight whatsoever. So it's going to be a struggle, I think, for the grain markets. Just the weather overall looks very conducive for corn and soybean growth and development. We're getting plenty of moisture across a lot of the Midwest. Crop is going in a fairly timely fashion, a little bit slower than a year ago, but for the most part, we're right on schedule.
All right. Hey, Brian, let's take a quick break. When we come back, we'll look at the livestock markets as a contract is set to expire today. Will we see more fireworks? Hang on, find out. Market Day Report continues in a moment. So in the past, 10, 11 sessions, if you look at the cattle market, we're seeing higher highs and higher lows and making some records along the way. And let's throw in some cash cattle rumored to have sold in Kansas yesterday at 218. What about dressed? We do know this, $350 for dressed cattle, $10 higher on the week. All right, we'll start trading the cattle market in about 10 minutes. But the April live cattle contract yesterday popped above 217, settled 216.35, up 70, and we'll have to converge with the cash market, whatever that is going to be today. That April contract will expire at the end of the session. June, 60 higher, 210.20. Feeders were also in on the run yesterday. They've been higher 6 consecutive sessions. Front month at 294.02, up 222. And the hogs have really been struggling now over the last few sessions. May contract down 40, June at 99.45, off $1.55. Let's go back to Springfield. President, Midwest Market Solutions, is Brian Hoops. Brian, thoughts here on the cattle market?
Well, yeah, a lot of the questions that we're getting from producers is when is this cattle market going to top out, or how high can it go? And the answer to that is when the consumer starts to back away at these higher price levels, we'll see a top in the market. Well, we may have some evidence that that's starting to happen, or it will happen here soon. ADP numbers came out this morning. That was employment change. It was only 62,000, down from 147,000 a month ago, and well below expectations. They were about 115,000, and that's the smallest increase since July of last year for small businesses. So we're starting to see some cracks in that armor there, and some of those news, but also the odds of a recession have surged to a new high for 2025. We're now at about 74% chance that we'll have a recession after that first quarter GDP came in at a negative 0.3%. And expectations were for a positive 0.3%. If we go into recession, there's no doubt the consumer is going to back away from beef at high price levels. They're going to search for a cheaper protein source. Producers, if you're looking at these high price levels and wondering how high can they go, I think you really have to lock in or want to lock in a bottom line profit on some of these cattle, whether you use options or futures, but get something in place, because this is what could derail this cattle market. It's not the supplies, they're going to remain tight, but it's the consumer demand. And if we start to lose our export markets, that's a real fear here.
So, Brian, you mentioned the odds of recession. Seems like we treat the idea of a recession like a root canal. And I probably need one right now. So I've got a tooth that hurts pretty much all the time. Root canal will fix it. Could recession not be as bad as we are making it out to be?
Well, we certainly hope so. You never want to go into a recession, but what we know from history is when we've done that, the consumer has pulled back from their spending habits as they have to, because prices increase and their wages don't increase to keep up with the increased inflation costs. So that's a concern. And if you're livestock producer, you have to be concerned about it at this time. You look at the hog market and what's happened there. We've lost a lot of our export market. Hogs are starting to really pull back here from their recent summer highs. And that's because of loss of exports, mainly due to China. A lot of reports that China had canceled about 12,000 metric tons of pork last week. That set off some selling. We don't want to pick a top in the cattle market, but I think you have to be fearful anyway, that at these high price levels, that consumer is going to back away, and maybe some of the export markets back away sooner rather than later.
Well, I'll see you back here tomorrow. I'm headed to the dentist now. Brian Hoops with Midwest Market Solutions.